Hello, ladies and gentlemen, and welcome back to the newest edition of Levelitics on Video. I am your host, Jordan, and if you don't know me by Jordan, I also go by Permable Nino in the Twitter sphere. Tough market out there in the crypto world, folks. There has been a lot of bloodshed. I think a lot of people panicking. I've seen a lot of people on Twitter writing off crypto forever. Equities continue to perform decently well. And I think a lot of people are wondering, is this it? In the last video I mentioned that, if we get some sort of nasty weekly close, near like 70K, for example, I think that's the line of the sand I'm mentally mapping out for myself. Um, is it over? And I think, and I still kind of stand by that analysis that you get like a deep low close around this area. I think you start wondering if you wait another 3 to 6 months before crypto is even worth touching again. And for the time being, it's fighting for its life, right? Bitcoin is at 73,700. I was looking through the Levelitics portfolio and I actually sold off the BTC within it this week just because I wanted to de-risk a bit. And the irony, and not the irony, but the weird part about what's going on in the current market is that, considering the other assets that I'm holding in the portfolio are Zcash, Hype, hold on one second, kicking things off early with the portfolio construction, Hype, Zcash, Near, and Virtual, right? I'm holding these other assets and Bitcoin is kind of, Virtual is not doing particularly well right now, but Bitcoin is pretty much my worst performing asset within the portfolio. So I actually sold that off to cash to get back to a 40% cash construction, right? Otherwise, I've still held on to everything else and I'm still pretty bullish on them. And all the charts still are intact, in my opinion, right? But we are in a very weird place, right? There's a lot of panic going on down here as we break below that level. I talked about how like basically 75K to 80K was kind of like our line in the sand, right? And now we're down below that, right? We're deep. And as always in crypto, I think in any financial market probably too, the price always goes a little bit deeper than you expected. So I think the fact that it's today's Thursday, I think, you want to see a semi decent close into the rest of the week, going into Sunday, right? Like if you see the price continue to bleed lower, I think you start to get a little bit nervous, right? This is the wall. We've talked about it before. This bear's wall between $75,000, $80,000 Bitcoin is where there was probably going to be a tough line of resistance, right? And then, like I said, the move, if we break down here, I think will be likely explosive, right? I think if you start to get down here, maybe the price has to creep a little bit lower before you get that nasty move down. But I think, I wouldn't rule out new lows if you start getting a move back down into this low area, right? You do not want to have some sort of deviation play where like, oh, you broke out above 75K thinking you're going to break out, then we break back into the range in a nasty way. I think that is a easy recipe for lower prices. And that kind of tells you that the fear in crypto is very justified, right? So today's video is going to kind of be about the fact of how much fear there is in the market right now. And we're going to look through a bunch of different metrics on lower time frames to really paint that picture. Obviously when these fearful prints occur across any metric, whether it's like, returns related, funding related, the, RSI readings or anything like that, I think one thing that people need to keep in mind is that obviously these never guarantee a bottom. And I think nailing bottoms is a lot more difficult than just owning in a bull trend, right? For example, like when the price is blue, the blue candles are blue, way easier to own than just me trying to snipe a bottom, looking through a bunch of different metrics thinking this is it. I told you guys before going into all this, I sold the BTC in the past couple of days, basically the day or two after I did the last video. And I think the reason that I did that is like, okay, price is not performing particularly well, right? Like I said, no momentum. We have red candles, and people are freaking out. And I was like, it's also like BTC is like my worst performing asset in the portfolio. Why am I holding this additional risk? I might as well cash up. And I think I said this before in the previous video too. Let's just say you get a bounce here, and let's say you don't always have to be the bottom buying hero, right? You can always just buy strength, and I think that is the easiest strategy in any market you want to trade in, right? So I feel very strongly that you get a revisit back up to these highs, the price just punches through, right? So you could be one of those people that just punches the price as it goes higher, and I'm like, whatever, I'm fine with selling down here, taking the small L on the BTC trade, and just holding on to the rest of my risk in the portfolio, right? Because let's just look at some other assets. Hype is absolutely crushing it, right? It's still blue, looking impulsive. This looks like it just wants higher. It's the talk of the town. I feel like how Hype is like kind of the inverse of what's going on in the rest of crypto right now, where the news flow is amazing. People are just super hyped. and unironically are super hyped about the price and the project, and this just feels like it's destined to go higher. Obviously, I think if there's any sort of nasty reversal back down to like the 45 or 44 level, just this where this impulsive breakout occurred, I think that'd be a reason to be like, what is going on? Some people would call that a bullish retest. I wouldn't love that personally. I think you want to just see this thing run off. People had plenty of time to accumulate this thing at lower prices. And like I said, all this price action, I've been watching it closely ever since it TGE'd. And this has just been really choppy, weird price action, right? This is the first sign we've had of very impulsive runaway type price action. So I want to see this charge higher, at this point, right? So these are the type of things, other stuff in the portfolio I'm holding. Hold on, let's look at Zcash. Zcash is printing in and out of blue and red candles. I think for me, my criteria for Zcash is just going to be if we get a daily close below 510, I'll cut it. For right now, these are just kind of mixed signal candles. I think they're about to flush back and forth between blue and red candles here. But I'm willing to take the risk because, as it's not much of a surprise to people that have been watching the videos and are not new to the channel, that I have had a bullish bent, right? And, that's why I'm buying when I'm getting these blue candles, right? Like I told you guys in the previous video or other videos too, is that when this blueprint happened for Zcash, I bought. I did not hesitate. That's why I bought when Hype, got announced that Coinbase was basically teaming up with them around this price, around $44. I didn't care about that stupid regulatory news that came out that dumped the price back down to 42. The second it reclaimed that at 45, I was like, this is the easiest buy ever. I'm bullish this market. And just own the leaders. That's just how I feel right now. So with that in mind, we can get into the other metrics and talk about the fear in the market. Like I said, I'm very bullish this market, but I'm only 60% exposed. So I think there's always balance and there's a bunch of nuance the way people feel about markets. And I think whenever you see other people talking about how they feel about the market, sometimes it might be good to ask them, like, what is your allocation? Or do you actively trade the market? You need to know you need to understand who is actually delivering this message to you when they tell you they feel a certain way about the market, because their time horizons, it just all is different depending on their context, right? Whereas I'm trying to actively trade the market and make money today, right? And basically capture quality swing trends in crypto. Right. So, let's just move on to the charts. I feel like that's been a lot. This has been an unusually long blabber sesh on TradingView to kick off the video. But nonetheless, let's move on. Okay. So this chart actually is one that I wish I'd put in the video earlier in the week and, all the trend related stuff. This green line down here shows you the Coinbase premium or discount across all assets that are on Coinbase and Binance, right? So this is around like 200 assets that are trading on both Coinbase and Binance, and whether or not they have a discount or premium. And you can see right now the discount is disgustingly massive, right? The average asset on Coinbase is trading 0.4% cheaper than it is on Binance. And that adjusts for the USDT price too, right? So this is really deep value, right? And, sometimes these historically deep values, when you get down to this level, can put in a bottom. You got it at the beginning of February. The problem is that, you also got a bunch of deep values here in January, right? And these did not really bottom the price. The reality is that this kind of was signal the market just wants out. It was negative all the way down up until the capitulation candle at the beginning of February, right? But however, it temporarily bottomed the price at the end of November near Thanksgiving. So this is what got me a little more nervous and more okay with selling my BTC, because if this persists and there is just no fight back, I think, this was maybe just a signal that the market wants out. There's nothing to be excited about, and we need to pack it in and just look for the next opportunity. Like I said, the price action, though, on some of these strong assets has not given me the indication that the market is fully ready to roll over quite yet. So I don't know, we'll just have to see. But that's why, you take things with take things with a little bit of nuance. You adjust accordingly. You take your worst performing assets and you dump them. So that's why BTC, like I said, was an easy dump. If I'm going to try to risk off the portfolio a little bit, is just because, there's obvious risk in the market, and that Americans obviously do not feel good about crypto. That's the standard understanding of what the Coinbase premium is, right? Let's pull this out a little bit further. And people wonder, is the Coinbase premium a high quality metric? And I think it's a very fair thing to ask. I would say that in convincing downtrends or convincing bull trends, it tends to actually persist as a premium when the price is going up and as a discount when the price is going down, right? So for example, here you had a consistent discount at the end of October all the way down to the end of November, right? And the price just went down only. And then it kicked back in near the end of December, and it persisted all the way down to the February bottom, right? So it is something to have a healthy bit of paranoia about, but I would say it's not high signal enough to like just constantly trade around it. You can see the color just flashes in and out over time. But you should pay attention to these deep negative values, right? These do not happen that often. Let's just keep dragging it out, right? This is deep negative value territory, December 2024, when price bottomed around here after the market got disgustingly flushed out after the U.S. presidential election. But you can see that there's two quality rallies here, right? April 2025, you see the price rallies up, consistent premium, right? Consistent premium, consistent blue candles, right? Blue candles mean premium. And then once again, the U.S. presidential election, November 2024, consistent premium, right? Then it flipped into discount mode when things started getting shaky. And this happens over and over again. Let me show you. Let's zoom back out here. Let's go to, this is the BTC ETF rally, right? This candle, October 24th, was basically the announcement that the ETFs were going live. Pretty consistent premium. Like if you can look at it, obviously there's a few candles here and there that go into discount, but for the most part, this is just a healthy premium. And then for the next leg before it just rips upwards in February to finish off the rally, it's nothing but a consistent Coinbase premium. So there is validity to believing that the Coinbase premium / discount is relevant. And like I said, we are dealing with really steep values. This is really bad sentiment. I mean, I think you should not be getting blowouts like this. Sometimes there's some waffling, but you can see this has been down only. Sentiment has gotten really bad over time. And this was healthy enough reason for me to be paranoid a little bit, dump a little bit of BTC, but at the same time think, if BTC survives the onslaught here, there is a rebound possibly in play. And if you get a price reattacking the 80K level and you start to see the premium going back up and possibly into positive territory, that's a good signal that you're like, oh, this thing's looking juicy. This might actually send. And it's usually a pretty decent signal if you have decently high positive funding rates and a Coinbase premium. The price tends to do pretty well. So that's where I'm standing on that. And that was something that I wish I'd included in the previous video earlier in the week. But, you live and you learn. That's why I want to make sure I include it in this video, so you guys always getting the full picture. Like I said, I'm wrong plenty. I'm not really here to pretend that I am the best and that I don't make mistakes. I'm kind of here to learn along with you guys and just kind of talk my way through the market, crystallize my thoughts, and hopefully people learn something along the way. I guess I pretty obsessively watch the crypto markets. I'm probably not the only person here that does that. But yeah, this is something that caught my attention after I released the last article. So let's move on to the next metric. Okay, so this chart shows the percentage of pairs with an RSI reading less than 30. These are out of, when I say percentage of pairs, I mean percentage of pairs that are perpetual swaps on Bybit. That's where I pull a lot of my data because they have a really good API with a lot of good resources. And basically large readings tell you if you get a large reading, it shows you that, for example, December 1st, 2025, the reading is 52%, right? On December 1st, 2025. That means 52% of pairs have a very low RSI reading, which tells you that a large percentage of pairs are oversold, right? So when you get these large readings, it means that the market is oversold over and over again, right? So we got a spike, right? We got some spikes. If we're talking about what's going on now in the market, we had an initial one on May 17th down here, right? The initial drop off the top, which was like the initial little flush out of leverage that was in the system. And then we just got the big boy one on May 28th, which is today, right? 42% of pairs got a decent flush out. And, as we saw in the BTC chart, it's not a terrible sign to see, if you really just want to call this a horizontal level right here, right? This whole 74K level, you can see it looks like just like some big structure, like a big horizontal structure. It looks like we swept the lows possibly. So seeing these oversold readings on a technical basis across a lot of different assets on Bybit, that's decent signal that there's something going on. There's decent panic here. And like I said, the point of this video is to kind of go through a handful of metrics that show you that on a lower time frame basis, there's a lot of signs of panic going on. The question is whether or not it, in a bull trend, this is a means for mean reversion. In bear trends, right, you can get these large spikes, for example, like look at January 21st, big spike, price goes sideways for a second, keeps rolling over. Big spike, price just keeps rolling over. But you can see, you know, there's other times though where it bounces the price, right? The end of November 21st, December 1st, you know, you got bounces here, December 17th. So along the way, you can get bounces in the right market conditions, right? In a bull run, let's see, I didn't even prepare for this part of it, but you can see, hold on, let's just do this, for example. Okay. Let's do this. Large spike. This is going into the U.S. presidential election. Large spike, big sell-off, October 3rd, 2024. Boom. This is a bottoming area. Maybe it goes sideways for a couple of days. Oh, like a week, basically. It's actually longer than I thought. Goes sideways for a week, on our way back up. You know, little dump here, up. Dump here, going right before the presidential election, the final dip, right? And boom. This is the another dip to buy. So in the right market conditions, you can even see it up here on December 10th. You got another spike, price jumps, right? So in bullish market conditions, these are good signals to look at for possible bounces and continuation upwards. The problem is that we don't know what kind of market conditions we are in right now. You know, this could possibly be a bullish retest of the previous range high, right? A deeper little type move into it, right? Get a little bit of panic, push people out, a lot of assets overselling, right? That is a decent possibility. And that's actually, I would say, my base case right now. And like I said, you know, for me, the stop out kind of is like, you know, I would prefer, if we're bearish, we just rip the Band-Aid off and nuke this thing down to 70K going into Sunday. Just be done with it. That way you don't have to make a decision and hold on to it going into next week. The crypto markets tend to make things difficult for you. But yeah, this is a decent sign. Like, you kind of want to see this panic going back into what was previously resistance, which should now be a support level if we are in bullish market conditions. Like this 75K level, 75K level, you can see multiple areas where this was a top before. You want this to become support, and you want people to be panic selling into it, right? You know, technical people who like to trade on technical levels, these are areas where they want to buy, especially with the sign of panic down here, where you have a lot of assets overselling, right? So this is a technical indicator, right? You know, you're using RSI, right? So let's move on to the next metric, which is the average open interest per perp pair Z-score on a 7-day basis, right? So this is open interest. We're into the open interest category now, and we're keeping things lower time frame, right? 7 days again. You know, this metric is also, this is using 4-hour candles, right? And this uses a 14-period RSI. So yeah, lower time frame. So now average open interest per perp pair Z-score using a 7-day moving average, right? And this just tells you that on a relative basis, open interest is high or low. And this is these calculations of open interest are using dollar open interest, right? So when they say like, you can calculate for any perpetual swap pair the open interest in the native currency, for example, BTC, or so you could be like, oh, there's 1,000 BTC of open interest, or you can say, oh, there's $1 billion of BTC open interest, right? So this is calculating the dollar across all perpetual swap pairs on Bybit, right? And you're taking the 7-day Z-score of that value, right? So in many market conditions, you can see in the past, November 21st, bottoming. You know, you get good bounces on this thing in the right market conditions. You know, even at the bottom, February 5th, you can get them along the way, and it can even mark tops too, right? You got it before the price even nuked. You got it at the top over here, you know, when people started to kind of get a little too in front of their skis when it came to leverage. You got it in March 16th, 17th of this year too, right? And so we're starting to get low value prints, right? We're getting low value prints on May 28th, which is today, right? Another signal that, you know, you didn't really get the real deep move. You know, maybe that's something, you know, I always, whenever I want to try to cheat forward and start feeling more optimistic and positive about things, I'm like, oh, that's good enough. You know, the problem is sometimes when you think, oh, that's good enough, the price will end up just rugging deeper, and it really needs to get that really deep movement on the metric. But what we're trying to look for here is confluence, right? It's not me obsessing over this one value and thinking I'm cheating forward. Like I said, there's already technical signs on RSI basis that there is panic here, right? There's some sort of panic going on in the price action. A large percentage of assets are oversold, right? And then you're pairing that with the fact that open interest on a 7-day basis is relatively low, right? So things are flushing out. Things are starting to stack up. This is the second thing that we look at here. And, a green dot would be nice, but it's not the end of the world if you don't get it, and you don't necessarily have to wait around for it if you don't want to. But let's just keep building the body of work here before, jumping to any conclusions. Okay, now this shows the percentage of perpetual swap pairs with an unusual change in open interest. And that wording might be weird to people. When I say an unusual change in open interest, I mean that upwards or downwards, right? Either a large increase in open interest or a large decrease in open interest. So these can be like liquidation events or people tacking on a lot of leverage. And this calculation of large changes in open interest is calculated using native units this time, not dollars. That way you remove price action from the equation completely, right? You're just looking at the native units that were added or removed from open interest across all these pairs, and you see if there's a lot of action going on, right? And as you've seen in the past, there are periods where it bottoms the price, right? You get multiple bottoms along the way. Boom. December 1st, November 21st. A lot of these start to add up. February 5th, right? You got a couple bounces along the way here, tops, bottoms. They're shorter term, right? Like I said, it's a 7-day / 1 week metric. So obviously some of these bounces don't always mean you're just going to boing up higher, right? Sometimes it just means you're going to get a bounce and continue rolling over. So we have another spike here though, right? You're not getting a red dot. So like I said, I think there's something here to consider, that sometimes maybe you do need that one last push or you need to wait for the reading. I'm not obsessed with that. Right now, what I'm trying to do is just build a base of like, there is panic going on as we are going back in to retesting what is supposed to be support going into the weekend, right? And you want to see this level hold going at, like, when the week is all said and done, you want to see that this kept the price up, right? If you start getting like a rug and the price closes down at like, I don't know, 71,000, 70,000, it's like, this is not panic. This was just the beginning of the move, right? So this is the area where like you do want to see these type of things happening. And now that we're removing dollars from the equation, you can see that, yeah, open interest is down across a large chunk of pairs. 19% of pairs have a unusually large change. And that means, in this case, I assume it's an unusually large move downwards in open interest, and that longs are getting liquidated because people were long at the highs. We looked at funding rates, and now funding rates have elevated a little bit in crypto for the first time in a long time, and I think that is a reason to be encouraged. However, unfortunately, it happened at an area of very large resistance. This 75K to 80K level was just bound to be very difficult. And, when people start levering up into resistance, the market makes you pay for it. So now we're getting the other end of it, right? Now we're getting beaten by the bears pretty badly. And there's panic. And people think that this rally will fail like the others. That's kind of where we're at in price action. And we're starting to see metrics start to ramp up that are indicative of people risking off or forced risk off, right? So this is another signal from an open interest perspective that, people are getting just kind of dragged around by the market right now. So now this is like I talked about, right? And this is the median funding rate for the top 10% most expensive perps, perpetual swap pairs on Bybit, right? This metric spikes up. If this is your first time seeing this metric spikes during rallies, right? You got it during the entire ETF run up, right? And that was from October 2023 to March 2024, April 2024. Yeah, like this happens in run-ups. You got it in August 2021, all the way through the end of 2021. So it happens over and over again. This happened during the presidential election in 2024, and now we're getting some spikes as we are attempting to put in a bottom here. And I think, like I said in the past, when it comes to this metric, if this is flatlined, the market is dead, right? If the most expensive perps are not even expensive to trade, it means that the biggest bulls have left the building. There is nothing to be excited about. They've basically checked out into other markets or back into cash for a while, and they just don't really care. Nobody's really trying to risk on. There's no risk appetite there. So I actually do want to see this thing have some signs of life as the market is attempting to break out, even if people are getting just kind of steamrolled along the way. Obviously it's not great that people lever up and it requires these shakeouts, but it's just kind of the way things add up over time, right? People obviously getting excited into resistance is not the perfect formula, right? And it could end up, biting us in the ass if the market just ends up mega rugging and there's more buildup in open interest than I realized. But there's the other side of it. It's like, people talked about how October 2025 was devastating, right? Perpetual swap markets got completely annihilated. This is the first sign of life that we've had since then. This means that, these people, people went into hiding or new players have arrived and they're ready to trade this market again. So that's encouraging. And yeah, so we'll see what happens next here. But, like I said, This is one signal, though, on the bad side for the short term, that people were getting excited into resistance. And that's kind of why we're paying the price right now, as price went from, I think, I don't know, 81, 82K down to what now, 73.5K. So, when you start to look back and tell the story to yourself, things start to make a little bit more sense. And in retrospect, like I said, I should have expected more of this, fuckery the second BTC started trading with less momentum. It's like, okay, this is obviously going to be a more painful process getting through this 80K level convincingly than I realized, right? It's not, I've told you guys this before, but I have a tendency to be overly optimistic at times and look past things. So this is why kind of doing these videos and writing the articles really helps me cement and check myself sometimes on some of these bad habits I have when it comes to trading. And when I think about these ideas and I talk through them and I realize what went wrong along the way, it really does help me think, oh, that's what I did wrong. Don't do that shit again, dummy. Right. So that was what I underestimated here. Right. Like, okay, I got half of it right. I'm like, not half of it right. We'll see if I actually got it right. For right now, the Levelitics portfolio is done pretty decently compared to Bitcoin, but I still believe that this is a good sign. You want to see people back, that there's interest to trade this market again, and people want to risk on, especially after everyone just got massacred October 2025. But like I said, unfortunately, short term, we paid the price. Okay, so now we are moving into percentage of perpetual swap pairs on Binance that have unusually large volume, right? And whenever there's large volume nodes, right, when you see a large percentage of pairs trading with lots of volume, that just means that there's a lot of interest, right? That there's either some sort of panic, it's emotion. It's kind of like if you're looking at this like somebody's heart rate, it's just spiking. Obviously, if you're watching someone's heart rate and you see that it's spiking, it's like, oh, maybe they're going for a run, right? They're like doing something that's abnormal outside of their resting heart rate, right? So when you see these big spikes, okay, maybe there's something going on here. So we got a spike on this move down, telling you 27% of perp pairs have relatively large volume, right? So there's action going on here. There's interest, and that's kind of what you want to see. Once again, right? You're seeing a lot of open interest getting wiped out. Oversold RSI readings, lots of volume, which means lots of coins are trading hands. There's a lot of signs under the hood on a lower time frame basis that, yeah, there's some pain, but there's emotion behind that pain. The problem is when you get these bleed outs, right? You don't want, the last thing that you want to see is that the price just goes into like 73 or overshoots these levels around 74 to 75K, and you don't even get large volume until 68K. Right? Because if that happens, that means like, oh, nobody really cared about 74, 75K. That means nobody was interested to buy, and that, the bears were just had their way with it, right? You don't want apathy. What you really want is emotion, because, if you see emotion in the market, it means people give a shit, right? You want to see that people give a shit about this level and that they're panicking. Or that it means, big buyers are stepping in and taking the other side of that trade, because the thing is with, when you have an ass load of money, you want that liquidity. You want somebody to ape into your bid, and so you can just gobble that up before the price goes higher. You have to be a lot smarter about how you go about executing in the market, right? So it is good to see that there's a lot of volume trading here, right? This is good. So this is just another thing for Confluence where you can see, yeah, there's a lot of people, a lot of coins switching hands here, and a lot of emotion. I've already shown you guys this. This is the portfolio right now, 40%, 39% dollars. Some hype, Zcash near, and virtual. I feel good about this for right now. Virtual is kind of one that I've told you guys before in the previous video. I'm kind of just sitting on it. It's not an outperformer right now, but the chart is absolutely coiled. And I think if the market does decide it's just going to go for it and that BTC is not going to rug here, right? Like BTC is going to hold it, and there's a lot of panic. And the panic was justified, and everything like we talked about in this video ends up playing out perfectly. Obviously it never goes that way, but it'd be great if it did. And we start getting a move back up to 80K. I think you'll start getting lift off from assets like virtual. The chart is just completely sideways. I'll show it again. I don't even care for the fans at home. I mean, the chart is just so sideways. I mean, this is just absolutely coiled. The second there are any signs of life in this market, you're going to be like, okay, well, it's already 2x'd right away. So yeah, just waiting and seeing with that one, which I'm willing to sit on it because it's just like a lack of volatility right now. And like I said, I think when the volatility kicks in, maybe it rugs downwards. Who knows? But I think the volatility is going to go upwards. So Yeah. And this is the Levelytics portfolio performance to date. We're the since inception down 23%, BTC's down 38%, altcoins are down 62%. So, not the best, not the worst, right? Doing better than the rest of crypto, but unfortunately still down dollars. It is what it is. This is a long only strategy. I don't do any shorting. So it's just, you can only make so much money when prices are basically only going down. So that's unfortunate. And then here, I'm actually going to give you guys a little sneak preview of what I've been working on behind the scenes when it comes to implementing AI into Do Terminal. It's something I'm pretty excited about, and I actually am just kind of like trying to wire all the different pieces together. I've got all the data on the website. So now it's all about tying it together and turning this into just one massive intelligence unit. And that way it's just easy enough for people to kind of just build, what I really want it to feel like is a person's own proprietary intelligence hub that's like catered to the way they view markets and the way they like to trade, if that makes sense. I kind of want it to be one of those things that people can kind of play with it, move it around, leave their own notes on things. But it's just going to be a really long process. So I'll show you guys a sneak peek though. So right now I'm putting together composite risk scores, right? This takes a bunch of different returns metrics, 1 month and 3 month metrics, right? So you can get kind of a macro picture. And this shows the percent, hold on, let me press the configure button. This shows the percentage of these the percentage of these metrics down here, which are like trend duration, average returns, percentage of pairs outperforming Bitcoin, right? The percentage of these metrics that are at extreme values, right? So when you get large prints, right? Oh, hold on 1 second. That's annoying. Large prints, right? You get them to your tops or bottoms, right? Price nukes, get a spike. Price nukes, get a spike. Price nukes, you'll get a spike. Price nukes, you'll get a spike. At a top, you'll get a spike, right? Because these are extreme moments in the market. And what I'm doing is I'm kind of, keep in mind, this is not all live on the actual site. There's like a couple metrics I think that are on the site right now. But this is for returns, right? So that shows percentage of these metrics that are at extremes. This is just binary sum. This just counts the number of metrics that have positive values, right? It's just counting, okay, because these are all returns metrics, right? The threshold is just basically set above 0. And, for the percentage of pairs outperforming Bitcoin, it's above 50. It just counts the tally. You get a score of 1 if you meet the criteria, score of 0 if you do not. And this is another way to do it. So I'm kind of trying to build out these different versions that people want to put together for coming up with composite scores. What I really tried at the beginning is I tried to combine a bunch of different metrics across a bunch of different types of data, right? Like returns data, open interest data. The problem is that all these different data points, they kind of move in different directions or on different time frames, so it just got really low signal. Whereas, some of the stuff, the return stuff, it's like very simple, right? You get an 8, there's only 8 metrics, right? That means it's maxed out. That means you're in full bull right here, full bull up here, full bull on the breakout, full bull. These are like the type of metrics you want to see. And obviously when you're at low readings, it means that there's just not much action going on in the market. And then here's the percentile average, which just shows you, it takes each metric and it calculates the historical reading, like where it lands on a historical reading basis compared to other data prints, right? So obviously large values tell you that it's one of the higher readings over time across all the different metrics, right? And this usually for returns naturally happens in bull trends. And when you get these low values, it is in a bear trend, right? You'll get these very, very low readings. You got it going into the ETF approval. You got it late summer 2024 going into the US presidential election. You got it after the initial inauguration sell-off for Donald Trump, right? Bottom there. So you get it also here in February. You got a little very average low reading of 26%. So there's just a bunch of different ways to look at these things, right? And I'm just trying to build all this stuff out so that you guys have this at your fingertips over time. But for right now, I'm trying to keep most of it a little more chill and like not on the live website, just because I'm testing these things out. I also built a trade scanner where I can pick different categories, and I'm like, go look for, give me trade ideas, basically, right? Because I think people really want these AI to do everything for them and completely outsource the intelligence, right? The problem is that if you don't do any work, you're just using like a template that anybody else has access to. You're not going to make money that way. You need to use your own alpha and information. And if you want to use the hub, when I say the hub, I mean Dude Terminal, the website. You can complement that with some of this stuff, right? And then you can use your own judgment to make decisions, right? You want this thing to feed you ideas, in my opinion, right? You don't want it to go out there and do all the work, because the reality is if you're just going to let the robot do all the work, then anybody else has access to that. It doesn't make it special for you. It makes you feel like you're being productive, but the reality is you're not actually being productive, right? So here is another thing that I built out called the morning brief, where you can click categories like you can in the trade scanner, and then it'll just write you an analysis. And I press run brief, and you pick 2 or 3 categories or whatever, and it just runs you an analysis. And then after the analysis, it'll tell you, right, there's a bunch of history, right? I've run a bunch of different other ones. So we can do it for funding and open interest, right? And it'll give you these type of summaries of the market, what's going on. And after it gives you the reading, like I said, it'll tell you what it says, like what it thinks, like risk off or risk on, like does this look bad, good, or whatever, right? So yeah, I'm pretty excited about that as well. And then here, I'm going to let you guys start building your own tables, where you can go to other tabs, right? For example, you'd be in the open interest breadth tab, and you can, hold on one second. I'll just, because it's not on the live site yet. Right, you can press the star here on the side of whatever metric you want to add to a new table, right? And just decide you want to add it, right? That way you can like kind of not only be like, these tables, they're nice, right? But they're only paired with the same type of metric, right? Funding rates are only paired with funding rates, where it's like, maybe I want to pair funding rates with returns data. I want to be able to look at all in one table. So that way the data kind of feels like your table, right? Not your table. It feels like your data. I want this to feel like your website. And then here's another thing that's going to be really cool that I'm doing. You can annotate your charts, right? So for example, let me go to a metric that I want to, right? You can build a horizontal line, and let's just say horizontal line, let's set it at 35, right? The horizontal line showing at 35. And then you can leave a note. See, the problem is I didn't leave a note on this, but hold on one second. Let me get rid of this. High. Okay, right? So it shows up on the chart and says high value, like signaling this is a high value. So when it comes time to use the AI terminal that I'm building too, these charts will have like this information baked into it, right? It'll have like all the data, and then also your personal notes of what you think about the chart or what happened at certain points in time, right? And then also on each page, you can add page notes. So it's like, if you think like, oh, high funding is good despite what other people think, right? I can say that in here, and that's like a general high level thing that I think about funding rates, right? When it comes to also time to use the Dude Terminal AI, it'll also be baked into your information when you're trying to pull information, right? You kind of build it and turn the AI into your own thing that just comes off of all your notes. And it doesn't need to be this one thing where you sit down and annotate everything at once, but it's kind of like as you go, you can annotate your charts. And like I said, this is only available for me for the moment just because I'm testing everything out. And obviously the website is free, so I can't let people use it because obviously it's going to cost me money and people are going to run through my Claude credits. But yeah, I'm pretty excited about this. And then I guess the last thing I'll show you guys, because it's hidden anyways, is here's the terminal. Yeah, so here's the terminal, right? You basically say, hey, build me funding. I'm not going to actually run it, but hey, build me funding rates versus 30-day returns for altcoins. Yeah, so you can just press send. Actually, fuck it. Let's just press send. Let's just see if this works. I normally, keep on, this is still a work in progress, so I don't know if how it's going to come out. But yeah, all those notes that you annotate in these charts will get baked into what you're asking the Dude Terminal AI as well, right? So you just eventually have all these notes taken across all these different metrics across a bunch of different categories, and it becomes just one gigantic intelligence hub where you have like your own AI, if that makes sense. I'm providing like the layout for you, but you get to play it out your own way. And I think that'll be really cool and exciting. That way, you don't really just have like this copycat of bullshit information that everybody else has, right? You know, you have the access to the same foundation, but then you can build and play your own game from there, right? So I think that'd be really cool. I think that's something that people would be excited about. And like I said, just because everything on Dude Terminal is free right now, I think it's really difficult though to just launch it out for free into the public, just because, you know, people will be running up a bill on my tab. I'm not sure why this is taking so long right now. Yeah, this is like crapping out on me. I'm not really sure. Oh, never mind. It's showing it. Here it is. Yeah, this is garbage. Hey, build me funding rates versus 30-day returns for altcoins. Yeah, so they showed 30-day returns for these altcoins. But yeah, basically this part is a lot of work in progress right now. But if you were wondering, though, how I got my favorites, right, the last article that I showed you was built with built up with that Dude Terminal thing. The AI Dude Terminal that I just showed you down there, right? These are all the charts from it. Yeah. For example, like this chart was in it. But yeah, you can see that you can build this type of stuff with it. Obviously, it's not very good right now at the just straight chat component. So I actually built like a fail-safe into it where I can select the actual metrics themselves to make sure and guarantee that the data actually shows up as I want it to. And that's how I built the good charts, the ones that showed up in the article. But yeah, I figured I'd give you guys a sneak peek of that. I'm pretty excited about it. Obviously, it's still a lot of work in progress. It might be something that over time, I might have to start with the basics, right? And release like this type of stuff to the public, not to the public, to people that actually might end up paying for Dude Terminal down the road, where they get access to all this different stuff. They can start doing it. And then I give them the Dude Terminal, terminal. Hold on one second. Give them this AI terminal on their own terms. I probably would need to film a video to show people how to use it best. And also, I built in a thing that shows people how expensive their request was. Like, for example, this was a 20-cent request. I don't know why that was so expensive. That's crazy. But yeah, normally my requests are closer to like 5 cents. But yeah, that's what I'm working on. That's what's going on under the hood. I think you guys know where I stand on the markets at this point. A lot of fear in the air, a lot going on. And like I said, this is the most concerning thing going on, the Coinbase discount that's going on. And yeah, guys, I think that's it for today. Let's see if anything changed in the price. Nope, Bitcoin's still waffling around the 73.5 level. Yeah, guys, I think that's it. I appreciate you guys tuning in. I'm sorry if it got a little bit messy at the end when I was showing you guys through the Dude Terminal website and all the changes I'm making. I'm obviously a little less familiar with them as I go, but I just figured you guys would be excited to see maybe some of the stuff that's going on in the background as I talk about it. But yeah, that's it, guys. Thank you so much. Have a great weekend, and I appreciate you. Leave any comments, share the video, subscribe, do whatever. Thank you so much. Goodbye.